நீராறும் கடலுடுத்த நிலமடந்தை கெழிலொழுகும் சீராறும் மதனமென திகழ்வரத கண்டமிதில் எக்கணமும் அதில் சிறந்த திராவிடனல் திருநாடும் தக்க சிறு திரை முதலும் தரித்தனரும் திலகமுமே அத்திலக வாசனை போல் அனைத்துலகும் இன்பமுற எத்திசையும் புகழ் மணக்க இருந்த பெரும் தமிழனங்கே தமிழனங்கே உன் சீரிழமை திறம்பியந்து செயல் மறந்து வாழ்த்துதுமே வாழ்த்துதுமே வாழ்த்துதுமே.
ஹலோ அனைத்து மக்களுக்கும் அனைவருக்கும் வணக்கம். ஸோ நம்ம டாக் வந்து பல நிகழ்ச்சிகள் கொடுத்துருக்காங்க. ஸோ அதில் வந்து இது ஒரு வித்தியாசமான நிகழ்ச்சி. இது வந்து ஃபினான்ஷியல் இன்வெஸ்ட்மெண்ட் ஸ்ட்ராட்டஜிஸ் பற்றின ஒரு நிகழ்ச்சி. பட் இது நம்ம என்னதான் நம்ம டாக் ஆர்கனைஸ் பண்ணாலும் கூட நம்மளுடைய சிறப்பு விருந்தினரான மிஸ்டர் ஹெர்குலிஸ் பாபு அவர்களுக்கு தமிழ் மொழி வந்து பேச தெரியும், பட் அந்த அளவுக்கு வந்து இன்னும் ஃபுல்லான டீப்பாக தெரியாது அப்படிங்கிற காரணத்தினால, பட் அவரோட ஃபினான்ஷியல் நாலேஜ் வந்து ஏராளமாக இருக்கு. ஸோ அந்த ஒரே ஒரு காரணத்தினால நம்ம வந்து இந்த நிகழ்ச்சியை வந்து தொடங்கும் பொழுது அவர் இன்ட்ரோடக்ஷன் சொல்லி தொடங்கும் பொழுது நம்ம வந்து முழுக்க முழுக்க கொஞ்சம் ஆங்கிலத்திலேயே போற மாதிரி இருக்கும். ஸோ அதனால நம்ம வந்து கண்டிப்பா இது வந்து ரொம்பவே ஒரு இன்ட்ரெஸ்டிங்கான ஒரு நிகழ்ச்சியா இருக்க போகுது. ஸோ ஐ எம் so honored to give an introductory note on high achiever like Mr. Hercules Babu. He is a resident of Colorado and more importantly, he is from Tamil roots. But then unfortunately, he is not very fluent in Tamil, but he can understand if someone is speaking in Tamil. He moved to Colorado from Houston about 20 years ago to work for IT companies like most of us. Over the years, not only he has developed his IT career, but he's also very passionate for financial services. He's an entrepreneur running his own IT company with a team in Hyderabad. His deep knowledge in stock market and algorithm-based recommendations have been very popular among his friends. He has developed his own tools for scaling and digesting stock market and specific securities. In this 45 minutes of a power-packed presentation, he's planning to share some of his work for the benefit of broader Indian communities, specifically our own tech community. We are so fortunate to have him as part of our society now and going forward. Over to you, Hercules, and we would like to welcome you. Hello, Mr. Hercules Babu. Hello, sir.
Hey, Sharanya. Thanks for the powerful introduction there. Hope I'll live up to your expectations.
Absolutely. I mean, I totally trust in you, and we are all here to listen to you for the next 45 minutes. It's all yours. And I just remembered one thing when they were saying that today is all about investment and it's about financial strategies. So, I mean, my dad always used to say, you first earn your money and then you first work for money and then you put money to work. So I have always done the first part, but the second part was always missing. And I think from where we are coming from, the financial literacy is yet to be kind of, it has to be developed a little more. So I think, this next 45 minutes that we're going to learn from you is going to make a lot of changes in all our lives. So thank you so much. Over to you, sir.
All right. Perfect. Thank you. Yes. There are different stages. There are different expectations. We have a wide variety when I talk to people, those who are kind of into the basics and not knowing what the expectations should be in the markets versus those that have been experienced in there, those who have struggled through the years and wanting to get there. So this presentation is mostly going to cover all aspects, right from the basic to the expert side of it. I'm going to touch each area, but each area may, require, several more days, hours of webinars we could probably do, but I'm going to keep it as simple as possible and something that will help you be successful on the trading side. So a little bit more background, like Sharanya mentioned, I do have an IT firm that is my core business there. And I've been trading for about 15 years now. I started with the currency markets, the Forex markets first on the automation side of it, and eventually kind of moved into the stock markets, and then got into the stock options, futures. So it's a combination of everything, including cryptocurrencies. And the primary theme here, I think, at least as part of the agenda that was distributed, is how do you trade in the current financial markets? This is probably a perfect time to do this session, especially with January and February being so volatile. And are we able to really make it, or any kind of help that I can provide to kind of get you guys out there? And how do you kind of keep on the positive side and not get uh, too much into losses? How do you avoid losses, and how do you manage your risk there? And depends on your portfolio size and what should your expectations in a year be, right? Some people have huge expectations. What can I put $1,000 and I make $1 million out of it, right? And I'm going to be frank out here. This is not going to be the presentation for you, right? This is something that we go steady, and over the course of time, probably get to retirement and say, here is what my target is going to be, and this is how I'm going to progress step by step, right? And not going to get into penny stocks, not going to get into the in-depth of cryptos and stuff too at the same time. How do you trade in current financial markets, and how do you pick stocks in the current financial markets, right? The current markets. How do you have to trade smart and keep it simple? How do you take advantage of market upside as well as the downside? Most of them do not know that, when the market's crashing, you just go on the sidelines or just take that risk, because you can also make money when the market's going downside. Right? How do you use some kind of price action based strategies? How do you do some kind of a mix of fundamentals? You don't necessarily have to understand all of these details in depth, but at a high level, you need to know what you're doing, and how can you use knowledge out there, the information out there that could be useful for the success in your trading. So with that, let's get started with the presentation here. Okay, I call this smart trading with market direction. And just to give a little bit of a background here, market direction is something that I've developed proprietary, that would include a lot of companies that would account for what direction is the market going. Is it going in the long direction? Is it going in the short direction? I have a separate slide for this, but just want to give that kind of introduction. So this is not in general market direction. You talk about SPY and stuff. This is specific to what I have developed, and I'll give you some of that information on how to make those decisions, and how do you use this as a critical aspect, as an ingredient for your trading. So that's the contact info. If anybody wants to reach out to me on email, ping me on the number. More than willing to accept questions. Let me get on to the presentation here. All right. First things first, let's get these out of the way. Disclaimer here. Presentation is for informational purposes only. Trading and investing always involves high risk. Stock options futures have special risks, and they're not suitable for every investor. Past performance shown in this presentation does not guarantee future results or success. You alone are responsible for your own investment actions here. So with that, let's get into the core slide here on what we intend to cover end to end. Right. The first part is, how do you set goals? Right. We have to be realistic. We talked about this one briefly. When we say realistic, we have to see, are we planning to, make 10%, 5%? Do we have to meet the benchmark of S&P 500? All of those are good to consider, but it's always good to consider what are your needs in life, right? Are you looking for something to do with retirement funds to grow? Are you looking for one of your regular taxable accounts to grow? Are you looking for college funds? Is this a Roth account? Is this an HSA account? Which account are you planning to trade on? Every account should have different goals, right? And I will cover this slide at a high level, but also get into some of the Excel spreadsheets and stuff that I use for my own reason to kind of do a baseline on where I stand at the beginning of the year. If I have to re-baseline anywhere during the year due to any kind of plus or minuses in my trading patterns and performance and stuff, you have to be really cautious on how you manage that. A lot of people go off of a goal being where I started. If you started with a $10,000 account 5 years ago, and you look at yourself and you say, you know what, I am at a $100,000 level, or have I lost it all? I'm at $1,000. You have to re-baseline every single year, at least every single year. If you can do that, maybe quarterly basis, it's fine. You have to start with where you are. If you have $1,000 remaining, if you have $1,000 that you're starting with, or you're at $100,000 level, what is your target for this year? How do you re-baseline down? So let me pull up a spreadsheet here quickly. Very basic, just that we get that idea on. All right, give me 1 second here. Okay, apparently doesn't seem to like what I'm doing here. All right, so high level, what is your initial investment? If your initial investment is about $50,000, right? And you're setting, let's say your annual returns is at 20%, and you're spreading it across for 20 years, you're going to have a compounded value of an ending balance of $1.9 million, right? And each one of you, wherever you stand, is this something that we would want to do on a 20-year basis? Do you want to put it at a 10-year basis, 5 years? Depends what your targets are. And like I said, every account is different. And let's say we want to start with $100,000 here. And with that, how is it going to look like? At the end of 20 years, I'm going to be at a 3.8 million. Is that what I'm going to look for retirement? We have to do that math outside of this to see what should be my goals and how can I get here. And each year, once I have 100,000, can I add more into that one? Can I add another 10,000 a year, right? And how is it going to increase, including the contributions that you do, as well as the 20% rate that you're adding per year, and where will you come down to at the end of 20 years, right? $5 million, is that where you want to be? At close to retirement, you may want to reduce the risk and say, you know what, I don't want to be at a 20%. I'm fine with 8%. I'm fine with 5%. I'm fine with 10%, right? Those are areas we need to have a plan and agenda and re-baseline every single year to see where do I want to be in terms of expectations. The second thing that comes out there is SPY, which is the S&P 500 ETF. And people use that as benchmark. If I don't meet or if I don't beat SPY in a year, I've not performed well. That is general industry standard when you're a fund manager and those kind of areas when somebody else is managing your funds, right? But it does not have to apply to you. If the market is crashed, let's say about 15, 20%, I still want my positive 20% for that year, right? We cannot take that as an answer for a lot of people or somebody that is managing your funds to say, you know what, the market is crashed 20%. That's the reason you didn't make any money either. That is not acceptable for me, because according to the strategies that I have developed, according to what I've been programming, developing algos and all of that stuff, there is so much opportunity that you can make money even when the market crashes or makes a correction there. We will review some of those results and some strategies. And one of the experiences that I would like to share and how I've trained somebody to do that. And to cover this side of it, it's basically around what should your expectations be. One other factor that I would like to add here is the inflation rate. Everybody is concerned about the inflation rate. We're about 7.5% on inflation rate, and it has not been the case in the last 30, 40 years. We've not seen this kind of a hike in the inflation rate, right? Multiple reasons. Don't want to get into all those details at this point, but the ultimate bottom line part there is 7% inflation rate just means that you lost your value on your dollar 7%. So if you have not made a minimum of 7%, whatever you have in your savings account today, the account balance automatically dropped. Even though the balance is the same, the value of the dollar is dropped. So you have to be cautious when you do your planning, right? Does that mean are we going to get a 7% increase in our salaries? We hope so, but you know what? It is what it is, reality wise. But you have to be cautious as you're planning and moving ahead on retirement and savings and college education and multiplying your funds, the growth. You have to consider that as something that you want to meet as minimum returns in a year. Otherwise, you're losing money, losing value of the investment or the savings that you already have, right? So something quick that I wanted to cover, and anybody is interested in any of the spreadsheets that I've shared or the presentation by itself, all right, don't hesitate to reach out to me. I put my contact information in the first slide. We'll also have it towards the end. Shoot out an email to me. I'll share this information to you without anything. So this whole thing, there is no selling involved. Just want to get that out of the way. There's no selling involved. I do not have any products, nothing. There's nothing commercialized. Everything that I do is for the community here. And I also have a WhatsApp group that I post the market direction on a daily basis. And anybody interested to join, you're more than welcome. There's no charges, no fees, or anything in that service there. So that is about goal settings, right? We talked already enough about market direction. Market direction is, for me, the primary driver. Without market direction, I wouldn't be trading anything. It's going blind into the war zone and not being equipped with the right kind of weapons to see what exactly, which side am I taking? Am I going to be on the buyer side? Am I going to be on the seller side, right? Am I going to be on the sideline? So market direction is going to tell me, am I going to be long? Am I going to be short? Am I going to be neutral? Go on the sidelines, right? We'll get into more of that one. Avoid losses. Here is something that I really, really want to focus on, right? The emphasis is avoid losses. What do we mean by avoid losses, right? You get into trading and you think, you know what, I need to make money, and you're talking about avoid losses. Here is your number one goal. Number one goal is, if you've been making money, well and good, right? This is for those that are struggling, because about 90% of the traders struggle making profits in the market, right? Number one goal should be you trade as frequently as you do today, but your goal should be, I want to be zero losses, right? If you can meet that goal first, then you can change your risk management. Then you can change the rest of the aspects of your trading. How do you get into your profit zone? But if you're not hitting that first goal of staying at a zero loss, we already have a problem. Forget about making money. That's your number one goal for the year. How do you not lose money, right? And stop thinking, get out of the market. There are several reasons that we account for, and there are several strategies that we can follow along to see how do we avoid losses. We have a separate slide on each one of them, so we'll get into the detail again. And when I say real plan, I really meant a real plan that you have a strategy in place. Your strategy is not like, I've heard somebody in the cafeteria in the office talk about some company that is going to do well, or kind of stick to a Netflix or an Amazon or a Facebook and say, you know what, that is going to be like. We want to come up with strong strategies, right? We want to have more education, more understanding on how the markets work, how the sectors work, how the industries work, what direction are they taking, right? Can I follow along some of those, right? The number one thing that I kept people ask is, what are the picks for the day, right? What companies do I invest into today, right? If you are at a beginner level or even at an intermediate level, I would consider it even if you are at an expert level, right? Question is, expert level does not necessarily mean one is making money. Expert level does mean that you understand the markets, you understand the technical analysis, you understand the fundamental analysis and the whole thing, but your execution is missing, right? So you may still not be making any money, even though we consider ourselves as an expert, an intermediate, as a basic level. So the idea behind that is, how do you come up with a basic one to make sure that you are able to make money before you can complicate it, enhance it, and get to that right kind of profit zone, right? And trade execution is critical, because all of this until this point is all planning and stuff, but executing profit and loss with predictable outcome. The reason I say profit and loss is, every trade, there is no guarantee that is going to be in a profit zone or a loss zone. If it is, yeah, let me know about it. But every trade, there is no guarantee. The market in itself is so random. There is no guaranteed results on everything, right? This is a game of probability, and how you work towards this goal is how we make it. Profit or a loss, move on with life, right? It should be a predictable outcome, though. If I say I'm going to lose about $100 or $200 per trade, have you measured your trade right? Right? Are you calculating it right? Are you entering the right number of shares in there? Are you moving the right kind of investment amount into each of those companies? Are you diversifying it right? There are a lot of components that go into that. So if we are not doing any of these, our trade execution is bad. Even though you might do really good on 10 of your stocks that you've entered, one of them is going to kill it and bring it all down, right? So we'll come back to those psychology aspects and all of those in the subsequent slides here. All right. So I already talked about this briefly. We need to make sure that your minimum expectation state inflation, S&P 500 is going to be your benchmark to compare performance. That is in general for market standards, but your goals should be individualized. Individual goals can vary on market performance based on risk levels, and also your individual condition statuses. How old are you? What stage are you in life? Family, close to retirement? What kind of risk levels are you at? How much do you really have that you're willing to invest? How much risk are you willing to take, right? And if you have a small account, the risk is probably high. If you're just about getting started, the risk is high because your source of income is going to be there. But if you're close to retirement, you cannot take any chances, right? Your risk has to be really low, and you need to manage that really carefully. You cannot take any chances on that. So market direction for trading decisions, right? Like I said, this is like the Bible, and we want to make sure we follow this diligently, right? Very, very religiously, and as part of trading. Without this, like I said, I wouldn't be trading. And every day I run my end of day jobs on the trading thing just to make sure my algorithms are running. They gather up all of the market data from different symbols. I do about 1,500 to 2,000 companies that we scan through and come up with a single value. And the derived value of this is the market direction long? Is it going to be short? Is it neutral, right? When the market direction is long, it's like saying, you know what, the market trends are strong, up direction. I wouldn't say all in, but consider it like that. So that means the market's going to move up. I'm going to be comfortable, confident into entering the market, into entering my trades. But you still have to follow your trade execution rules, right? What your risk levels will be, and how much you're willing to invest into each of them. How much are you invest to lose or willing to lose in each one of them? If the market direction is neutral, that means the market direction is kind of indecisive, right? Does not know which direction is going to take. So at that time, what do you do? What kind of decisions do you do? Do you scale out? Do you continue to be in the market? Those are things we'll again come back in the subsequent slides there. But the market direction is short, multiple things that can happen here. That means the trends are going to be really downwards. Currently, the market direction is short, and that's what we published in my group to say market direction is short. And that is a caution for those that say, you know what, I'm not too comfortable trading when the market direction is short, when the market's crashing. I would like to take all my money, move into cash, right? No open position, shut down everything. But in my case, I do it the other way around. If the market direction is short, I go hedge on some accounts. That means I still be there, hedge that account. That means I do some kind of short selling in there, as well as I can do some kind of options, futures, kind of balance of what my portfolio is so I don't get into losses. But on some other accounts, I purely go 100% short selling, which means I say, if the market's crashing, I want to do a short and I want to make money when the market's going down, right? And a lot of us do not know how to short sell, right? Those are things we need to educate ourselves, learn how do you do that. So reach out to me if you have any questions on those basics. There are other videos that I've done in the past to educate community. So if I can pass on some of those links and stuff, it will help you on what short selling is, what is the fundamental concept behind it, how do we do that. We can discuss about that as a separate session or so. But I still will cover on some of them when we get into the next slide on market direction being short. All right. This is one of the critical things, right? Avoid losses. Let's go in a clockwise direction on this one, right? So when we short sell equities, right, these are our hedge positions. So if you have, let's say, we have a company, let's say Netflix or so, that you're invested in. And what you noticed is the market direction. Remember, everything now is focused around market direction. If the market direction is short, now I need to protect myself, right? If you've made enough profits, how do I protect my profits? Or if you just entered, how do I make sure it does not get into losses, right? And one of the other things you can do is we can short sell equities. That means find some other companies that are really going to go down because the market direction is short. But when the market direction is short, that does not necessarily mean the entire market is down. You need to figure out, you need to watch out for what sectors are going on, what industries are going down, right? And can I use those and short sell some of those equities so I can make profits on those while the Netflix and the other companies, their regular portfolio is going down, I can go up on the other one. So in that way, it will hedge and kind of void the losses there, and you don't get into deep losses. You'll at least stay break even. That is short selling. Inverse ETS is another one. Short selling is not allowed in all accounts, right? Especially with the retirement accounts, you cannot be short selling it. But what else can you do? You have inverse ETFs. Inverse ETFs means that when the market's crashing, these ETFs are going to move up, right? You have inverse ETFs with multiple different things. There is SDS, SQQQ, right, for Nasdaq. There is something with the gold miners. You can do JDST. Gold by itself can also be a hedge concept. So we have to look out for those ETFs and keep these tools ready when the market direction is changing. Because sometimes when the market direction goes short, we don't necessarily exit out because we probably are aiming for long-term capital gains. You have to be really careful about that one. I understand some people kind of focus and say, you know what, I'm not going to close any positions because I don't want to pay that extra tax. But the first thing you need to ask yourself is, before you even pay taxes, are you going to be in a positive zone to really pay those taxes? If you're going to go on losses, why not protect them? Either get out of the positions or put some hedge positions in there. Inverse ETFs, short sell some of them. Stock options, especially with the puts, can also be one of the vehicle. If you can get into this gets a little complicated. I don't like the concept of time decay when you're trading stock options. There are benefits. The leverage is key there. You can do that. Learning how to trade and stock options, especially with the put options, is good when the market is going against you and you want to protect against your portfolio, especially with that leverage coming to the picture with stock options, as well as the other one that we have is futures. There is something really special about futures. People are afraid in getting into futures because it's considered one of the advanced topics with futures. But what I would say is everybody needs to take some time and understand how futures works. I will tell you one single reason why you would want to do that. We are in a current situation with Russia and Ukraine, for example. Something happens after hours, the market's going to crash like crazy, right? By the time you wake up and even get a chance to make a decision on that, you've already taken a huge loss on your portfolio. But if you had access to how to trade futures, futures is almost 24 hours a day. That means you go into futures, you hedge against your portfolio and say, you know what, I'm going to trade short on futures. So when the market opens tomorrow, I don't see a big red flag on my account to say this is how much money you lost, because the futures are going to raise that hedge and not get into so much losses. When the market opens, you can always come back, close out the futures positions, close out the other ones, balance out stuff, rebalance your portfolio so you don't get into too much of losses, right? Scaling out is also one of the critical things. When the market is going into neutral, when the market's going short kind of a thing, can I reduce my position sizes? Right? Very, very critical. And if you don't want to take any chances, you know what, market direction is short, I don't want to even trade at this point, go into cash. Cash just means that you close all open positions and wait for the market direction to come back into a neutral zone or into a long zone. Right. And quick time check, we have another 15 minutes here. So a real plan, right? When I talk about a real plan, I'm talking about validated strategies, right? how do you trade based on market direction only? What I've tried is, as an experiment, this is what I did. The entire last year for one account, I dedicated only for futures. All I did is a one contract on those futures because it's a small account on a Roth IRA. One contract on futures all through the year. I trade only based on market direction. Market direction is long, I go long on futures. Market direction is short, I go short on the futures. When it is neutral, I kind of take the right kind of measures there to kind of avoid those losses. Only with that, imagine your stock market last year, S&P 500 did about 26%, 28% of dividends and stuff in there. But this single strategy with only one instrument to trade for the whole year on futures made definitely more than what S&P 500 did last year. That is only with one contract. Imagine if I have to increase the position sizing, automatically, as soon as I move from one contract to two contracts, I would have doubled the percentage of return there. All I wanted to say is using market direction is the number one key. On top of that, if you want to put sectors in there, industries in there, don't make it too complicated. Sectors, industries, follow the direction. Do some kind of portfolio management, rebalancing strategies, right? You have about $10,000 in, market's going neutral, move your portfolio back to 5,000. Market's going short, put some inverse in, move it up back again to $10,000. It's always going to be a balance there. If you're looking for a buy and hold situation, then I would say good luck on that one. You may get lucky, but it's always good to have the right kind of education if you're planning for the next couple of decades as part of your planning and trading and education. Price action and fundamentals. Let me pull up some charts on price action, fundamentals, and market performance so we get a better picture here. So hopefully this time it's going to work out right. All right. So let's see. All right. So this is SPY. It's an ETF to measure the S&P 500, which is generally the benchmark for the country, right? How we're doing. So price action, there's many ways to do price action. One of the tools within price action is called a Fibonacci series, a Fibonacci tool. So if you see, the market kind of went from top to bottom here, and if you draw this line, it's going to split this trend into multiple different levels, right? A 23 level, a 38.2 level, right? A 50 level, 50%, 61.8 to 78.6 kind of. And these levels are very powerful. Make some time, read through these Fibonacci levels, see what happens. It went all the way from top to the bottom, right? And generally about 50% to 61.8%, the resistance is pretty high. So if you notice, it kind of breached it hit the 38.2, bounced back, went again to 61.8, bounced back to 50, went back to 61, again hit 50, 38 here, again struggles between this one and goes back. So these lines are pretty strong when it comes to resistance and support. Can this be traded by itself independently? I would not take that chance because it always needs to be complemented with some other rules to make sure your trading is effective. But it helps to work with price action as one of the bases rather than going off of technical analysis. I don't mind technical analysis, but it's more of a lagging indicator for me to really go off of moving averages and stochastics and those kind of things with RSIs. It gets confusing. Too many indicators is going to get it complicated too. If you really are into technical analysis, maybe try to stick to only two indicators maybe. I do use indicators. If you see that yellow line, it is the ATR trailing stop loss. If you see some of those white dots there, I build my own logic around candlestick patterns. For example, I don't like to call them candlestick patterns. It's just some indications whether do I have to go short right at this point, whether do I have to go long, right? But by themselves, I would not make any kind of decisions on that. My decisions will be purely based on market direction. If it's market direction short, this is the place where I need to enter, take these profits, right? We have to learn how to make money when the market's going down. So just wanted to give you that background here on price action and Fibonacci series and how it could be worked out. Now, let me switch into the sector rotation thing that I talked about, right? So here is another one. This is all the industries that you have, right? If we can pull up all these symbols separately, you will know what it is. But if a lot of them, a lot of us struggled in January and February because the market has been going down, or it's been so volatile that we were not able to keep up, and there's a lot of us that lost money. But do we really have to lose money? Can we do some basic checks in there and say which sector, which ones are actually making money? If you look at XES and XLE, these both are energy stocks. They're up about 22%. Just making sure this is YTD here. Right. So this is about 16%, 18% or so, while the S&P 500 and a bunch of them are in the negative territory. Can we look up some of those, what sectors there are? And within those sectors, can we pull up what stocks are actually performing? This is how you kind of do the drill down. Market direction is short, right? But again, let's look at sectors. Let's look at industries. And when we look at each one of them within those industries, can we get a little bit deeper and say which ones are actually performing right, rather than sticking to the standard same old NASDAQ tech companies and hoping that they will recover back and kind of sit there. The time is critical for us, right? If you lost 1.5 months here, almost 2 months in the year, and it's still negative, you need to be really careful, because is this something that you would want to continue to do, or do you want to find those other ones that are kind of moving up positive in the market, right? So that was one. Let me move this out, get back to the presentation. So that was about price action fundamentals, right? Fundamentals is always a question. A lot of people say, what do you want me to look up in fundamentals, right? And is it a PE ratio that I need to look for? How do I do these calculations? Do I really, you don't have to get into all those details if you don't want to. There are already a lot of formulas and stuff out there in the market. Like one of these scores is called Altman Z score, right? Or Piotrowski score here. So what that does is it has built-in logic, and there are tools out there on the internet that will calculate for every single, I shouldn't say every single, most companies, and give you that score. If the score on the Altman Z score is less than 1.1, right, based on the calculation that it comes up with, then most likely this is going to go bankrupt. It's in a distress zone, right? But it goes through a lot of parameters. It goes through working capital, right? What is the total assets? How is the retained earnings? If you divide it by the total assets, what's that ratio going to be? Earnings before interest and tax, and what are your total assets, your market value, your total liabilities, sales, assets. It does all that into the mix and comes back with a score. Can we just use that score to make a decision and see those that are not in the bankruptcy modes, avoid those kind of things, especially if you're looking for small cap kind of companies? Mid cap, you need to watch out for those. Is it going to go down? All of my investment will be wasted. On the other side, we have the other one for Piotrowski score there. That is a score between 0 and 9. Even that one goes through a lot of them. It calculates the profitability. It calculates the operating efficiency, your leverage that goes into it, the loans that the companies have taken, what kind of liquidity is coming through, what are the source of funds, right, for these guys. And based on that, when the values come through, and a decision is made, when the numbers are really close to like an 8 or a 9 or a 7, that zone, then they are incredibly strong. And those are the kind of companies you need to invest in. And those are the kind of companies you need to watch for, even when the market's crashing, when it is ready to kind of take on, what kind of companies will pick up versus what kind of companies will not, right? So that is again leading to another conversation. I'm going to pull the charts back again, right, and give some examples and what I mean by that. Right. If you are unfamiliar with the reading charts, you'll have to bear with me, because this is something very essential for our journey with trading. So just want to make sure that we all get into educating ourselves during the course. Everything that I've taught myself, the developed programming, all that is self-taught in here. There's so much so many resources out there for us to learn. There are so many data subscriptions. I pay a few $1,000s only on data subscriptions, right? I also have a team on the stock market side of it that will help me with market analysis, and they will do the development, the market scans, the analysis, the in-depth research that goes into it. And I also have a team member that will help me out on my trade executions. Life keeps us busy, right? You need to find your way out. That was my way out, because I couldn't do any day trading and stuff with the business picking up on the IT side. And we still have to find ways on what is my end result, right? What is my passion? Where do I invest into? How do I make this happen? So I decided that I would kind of do all these subscriptions, get the right team in place, things get going, and it pays for itself, right? So I am pulling up some of the companies here that I would call them as market performers. Let me see, NVIDIA, right? I'm going to pull up some that are familiar to us, because there would be some companies that we pull up and we are not familiar what they do. So if we start with SPY, right, this is always the benchmark thing. If you notice, the market kind of moved up from here to here, from October into about November zone, and kind of dropped again into December, and then again moved up early part of January, crashed again about end of January or so, and kind of going sideways and playing there. So what I would do is I will take this as the bottom, right, from first week of October all the way to the first week of January. That means from the low, the valley, all the way to the peak on the stock market. Take those dates, right, and I will say, all right, I need all of the companies that have performed exceptionally well from the first week of October all the way to the first week of January, right? So I get a huge list, like a laundry list, right? Now, the next step will be, give me those that have dropped all the way from those January 4th, or the first week of January, all the way into February, right? So it's a two-step process. You found those companies that are performing exceptionally well. Then you go through those that have kind of taken a time. So let's go through these companies. NVDA, right? If you notice, it's following about the same trend as SPY. It starts about October, went up right here, right? It did exceptionally well. I don't want to go through those other fundamental aspects about shortage of chips and all of those details there. I'm only going by common sense at this point, right? If the market direction changes and the market goes up, I want to know which companies do I get into, right? And I want to really know which companies are actually picking up, versus not just the ones that have performed really well between October and January. I want those that perform really well, as well as those that are picking up along with the market direction, right? Then you get about 50 companies or so, let's say, from a NASDAQ listing. Out of that, you kind of filter those out and be ready with your watch list to say market directions going long. Can I use this basket? I would use the word basket, because it's going to be a basket of stocks that I would want to trade, right? So that is one of the strategies I would use to re-enter the market. But again, when the market direction went down in this zone, either you go into cash or you scale out and you avoid all of these losses here. Okay, so that was information on price action fundamental market performers. Let's go to the next one here. All right, trade execution. I'm going to run through these things quickly here. Risk management is really critical. I'm going to focus on one or two items here. Risk management is really critical. We already talked about how many shares to buy. How do you make that decision? How much are you willing to lose per trade? Scaling in and out, how much are you exposed in the market, especially when the market is crashing, right? Can we protect ourselves? Psychology is a very critical thing in terms of trading is concerned. Greed, right? How much are you looking for in the market? Are you content with something? Where are your exit points? You need to be really careful on how do you take these trade executions and those decisions, because it's going to get complicated if you don't have rules defined around it. Fear part, FOMO is really something everybody has a challenge with. I had trouble with that last week too. You fear of missing out, right? As soon as the market is going back up in a positive direction, we all kind of jump into the market, right? Market's moving up, let's jump back in on the wagon, make some money, right? That is the fear of missing out, not really waiting for a confirmation actually to check, is the market really moving up, or is it a teaser there, right? Over trading is one of them. I've been losing money. I've been making a lot of mistakes. Then you end up over trading. You keep buying, you keep selling, you keep buying, you keep selling as the market's volatility goes on, and you end up losing money both directions. So you need to watch for that and control those aspects, and greed and fear. Hope is another one a lot of us fall into, where you kind of enter into a certain trade, and then you are in a loss trade, and it's been going in loss for months and months together. You just have that hope that one day it'll come back on, that you think it's a strong company. Don't make any of these biased based decisions, right? Let the market tell you, is this going to come back, not going to come back? Move your investment elsewhere that's going to make money for you, right? Basket trading, diversified, right? Don't kind of stick to one or two or some common stocks that you always trade. Kind of diversify. Can you make it about 20 to 30 trades or companies into different sectors, into different industries, right? Because you don't want to take a hit once you put everything into a NASDAQ kind of companies, technology companies. You must have seen that in January and February timeframe, that NASDAQ crashed like crazy. And all of these technology companies, including Netflix, including Facebook, Microsoft, all of them took a hit. Can you kind of split this up now? Can we do a little bit of metals? Because generally that's something that we would avoid. Metals has done great for itself, and the market's crashing. In gold, for example, the gold miners, right? Think different. Add a little bit of a mix to your portfolio. Decisions, once again, are your trades aligned with market directions? If they're not, I wouldn't even try trading those. So let me quickly pull up one spreadsheet. So I talk about it, but I don't want to leave it incomplete on what I'm trying to say here. So this spreadsheet here, very basic for those that want to get a hand on this. Let me know too. Here is a starting date when the market's going to come through, right? And when we're going to enter. How do we calculate the number of shares? I first calculate the stop loss on what it should be, right? And then I will identify what is the risk dollar that goes into it, right? And what is the kind of risk that I'm willing to take. With that risk, you want to calculate how much risk per trade are you trying to take by dollar amount. So I calculate that risk by the amount applied with the dollar, then come back with the number of shares. Profit is nowhere in the zone when you're doing these calculations on the shares and the number of shares to buy, right? It'll come back with a value and say, I'm going to do $15,000 into this, but I'm going to lose only $100, right? But my profit expectancy is about $400, which is a risk reward ratio of 1 to 4, right? Looks good, but you know what? I don't want to put $15,000 for $400 profit, but let's look at this other one, LABD, which is, I would say it is short because it's an inverse ETF, but it's actually a long one that you can also do on your regular retirement ones too. Do the same thing, put your stop loss in there, right? Put your current price in there, and it'll tell you my risk is going to be about $4, right? But my risk reward ratio, I want to put it at 3%, or 3 times rather, and say, if I'm going to invest about $700, I'm going to make about $300. This is a good one. Probably pick these. So this is the kind of math you would need to do before you enter into any trade, not just because something is really moving up and get into it. You also have to think about how much amount or account balance do I have? How many different companies can I spread that across to get the right kind of return, right? So if anybody interested in this spreadsheet, also you can send out an email to me. I'll share this. I've got enough comments also going around where the information needs to be entered, how it needs to be entered, and what values to look for when you execute your trade there. All right, so I think I did good. Sharana, if you can confirm, we're good on time here.
Absolutely. It was a wonderful, wonderful session. A lot of learning, Mr. Hercules. It's like, I think even people like me, we just have certain myths, like, if we keep our money for a long time, even if it is down right now. I think, for me, I was like thinking, okay, maybe after, down the lane, 3 months down the lane, it's going to build up, or, it's going to come up. But I think, I've learned a lot from this session, especially like, I think one thing is short selling. I was very keen on knowing more about it. I think we should have another session on that. And, all about the zero losses, the real plan strategy, and the market directions. So those are all like really good concepts that we have all learned today, Mr. Hercules. Thank you so much. But we also have a lot of questions in mind, and I would like to invite Mr. Karthikeyan. Hello, Mr. Karthikeyan. Karthikeyan, I believe you're on mute. Thank you. You're still on mute, Karthik. Thanks.
Yeah.
Hi,
Hi,
Karthik.
Sonia. Hi, Hercules.
Hey.
Thank you.
Thanks. Thank you, Karthikeyan. I would also like to invite Mr. Vijay Kumar for the Q&A session.
Hello, Hercules.
Hey, Vijay.
Hello.
Yeah. Good.
Awesome. Over to you, Karthikeyan and Vijay.
Yeah, it's a wonderful session, and and very informative session too. And so we would like to have such kind of session also often with broad information. Thank you. And I have a few questions on the stock market. So, what is deferred loss? Do we need to pay tax for the deferred loss, even though it's loss?
No, if you're in loss, you don't. But there's a few things that you need to watch for. If you have a loss exceeding $3,000, generally that's not allowed to be applied to bring your adjusted gross income down more than $3,000. That's the IRS rules there. But the losses, of course, you don't have to pay any taxes because you've not made any money. But at the same time, if you're trading excessively and you think it is something like you're trading for as a business, there is something called mark-to-market status in there. And we can look up that and see, do you really qualify? Is it the number of trades that I do in a year that I'll qualify for that? In that case, you are running that as a business. Any kind of qualified business expenses can also be written off there. Your data subscriptions and stuff can also be taken off. If your losses are beyond the $3,000, you can use those losses also to offset the income that you've made for that year.
Okay. What is it? Wash sale? Do you say?
Right.
Yeah, go ahead.
A wash sale is something that you've entered, you closed it, but within the 30 days, if you want to kind of re-enter in that one, you will get into that wash sale zone. So those kind of losses, they would not let you consider for the $3,000 limit that you have. So if you're really concerned about that one, you have to watch for that so you don't enter into that wash sale situation. I don't look for those situations. If there is an opportunity to get into, I just get into that one, because those are all parameters that are low priority on my list. The idea behind that is the opportunity show up. Can we do it? Taxes are taxes, right? You can't escape them, but if you can plan around them to make money, that is the number one goal.
Okay. Sometimes, like after the quarterly result, if they give a good result, but the stock goes down, and the opposite way also for why it's happened. Is that
Right.
expected or?
So what we look for is very basic, right? They know how to manipulate the numbers, right? Just because the numbers look good, your earnings look good, they said your estimated value so and so, but your actual kind of beat the market. There are a lot of underlying factors on how the company has done in general. If those don't align, even though the numbers have met expectations or even exceeded Wall Street's expectations, it's still going to tank. And sometimes you don't know why the markets why the company is tanking, because there may be some inside information we may not be aware of. But that's the time I would apply the price action strategies, because if the market's going down and I'm expecting this to go up, put your stop losses in such a tight fashion that you don't hit into those losses, and find for those that will give you the right kind of opportunities.
Okay. So how I can limit our my tax? For example, if I got like 10,000 profit or 20,000 profit, so whatever it is, it goes. Most of them goes to tax. Is there any other investment way if we got some amount in the stock?
Right. So let me answer that a few ways, right? One is the mark to market that I talked about, right? You could explore those, consider that as a business, because you can also write off some of the expenses that come with as a business. The other one is if anybody is into day trading, especially, or anybody is into more market direction, more on the index side of it, is making enough money, I would ask them to look out for trading futures. The benefit with trading futures is let's go back in long-term capital gains and short-term capital gains a little bit, right? If you've held a stock for over a year, your tax bracket will be considered as long-term capital gains. That means it will not be a regular tax brackets on what your income levels are. It'll probably be about 15%. But if you're in a short-term capital gain, that means you've not held the stock for more than a year or so, you will fall into your regular taxes, whatever your income levels that bracket is, and you will pay that percent. But if you're trading futures and you've not held that for over a year, 60% of it will be taken as long-term capital gains, even though I'm day trading, and 40% will be taken as short-term capital gains. So if you want to consider that, do day trading and stuff, consider getting into futures and still get that benefit of long-term capital gains in there.
Okay. So what about that spreading? Is it good to play with the spreading, either at a call spread or put spread? Whenever I heard from people, it says whenever we use spread, we will lose money.
Let me tell you a different version on that. Whenever you trade, you lose money, right? that
Yeah.
is that is one common thing that I would start with, right? If we don't know how the market functions, how price action works, if you need to understand the basics, if you cannot make money on a regular stock and kind of predict the direction on how the market's moving for that particular company, don't even touch stock options at this point.
Right. Okay. Yeah. Thank you. Thanks for your valuable time. So goes
Okay,
to Sonia.
perfect.
Yeah, great questions, Karthikeyan. Very interesting and great questions. Thank you so much, Karthikeyan, and for the questions, and Hercules for the answers. Amazing. So moving on, we have Mr. Vijay with the next set of questions.
Hi. So it was a very wonderful session with a lot of information that it would take some another year to assimilate stuff and do work. So my question is like, so to keep things simple, there are some vendors or some companies which offer this automatic portfolio manager or robotic advisor. How good are they in terms of their effectiveness, and what sort of risks they involve?
All right. I missed the last part of the question, but I think I understand. So the robo advisors and stuff, right? You have to look out, what is the company's background. You need to understand what kind of risk levels they are. Can they share any kind of back testing results, right? And it is difficult to kind of make a decision whether to go with them or not unless you have real experience with some kind of forward testing, staying with them and see what the results are. I would say start small, get an understanding, kind of track through during the dates, right? Like when I said from October 4th to January 4th, the market moved up. From January 4th, the first week of January or so, the market crashed until February. You need to kind of be with them, have a small amount, and kind of evaluate and see, are they controlling the risk properly? Are they controlling the losses properly? Are you exposed to a lot of risk? Is your is your portfolio going down, right? More than what the market is going down will be a good starting point. But to directly go off of them, look up on an internet and say, is it going to do good without having any knowledge on what their robot strategies are, it is going to be a difficult one. Let me share one experience with you on this one. I have trained somebody for the last few months. The girl does not have any experience. She's a trainee, no experience on the stock markets. So I got her into uh, stock market trading. I give her market direction. All I give her is market direction, and I taught her how to do stocks and industries, right? Rotation and how to trade sector ETFs. How do you kind of balance that, rebalance your portfolio and stuff. So if you notice, the markets for January and February have not been great, right? And once again, the goal is not to make 100% or so, right? Especially when you train somebody and you're expecting some results. Right now, she's kind of managing one of a couple of 6-digit accounts, right? With all that volatility that's happening in the markets right now, her performance is about 6% on one account and about 8% in another account. And she now knows how to trade options only on indexes, right? And the sectors, rotation, right? And how do you switch inverse ETFs? And this is what is the thing on a daily basis.
Okay. So one more question I have is like, when we always hear that you have to diversify and start from basics. So what is the best, what is the optimum entry value that one should try with if you are a novice investor, and what is the diversification formula or anything like that?
Right. There are some rules that I follow in part of diversifications, right? So what I look for is one of the charts I've shown was around sector performance. You put a sector performance, compare it with S&P 500, right? And see what are the top performing sectors. Don't diversify it into all the, the dozen sectors and hope for a result, right? That's as well putting it into an S&P 500. But take these sectors, I would do the top 3 sectors. It depends on what time frame you're comfortable with. Some are comfortable with a 1 month time frame, some are comfortable with a 2 month time frame. I would do, because I like swing trading, which is more like you open and close within a few days, weeks. I do a comparison between 1 week and 2 week and see what are the top performing sectors, industries, and within those I pick the top performing companies. In that way, you're taking the best shot at the best performing companies at this point of time. The total portfolio and how many stocks to keep on, if you depends on how much time you have, how many tools you have to manage. If you are doing everything manually, I would keep it about 20 to 30 stocks in your portfolio based on this rules that we've defined. But in my case, you wouldn't you would be surprised to see about 100 to 150 of them in mind, because I have tools and programs to do that. Once the basket is ready, I have one program to say execute this basket, and it will know exactly how many shares to open, right? And what should be my entry. Put the OCO numbers in there. OCOs is one cancels others. These are bracket orders with stop losses and take profits and all that. What it takes about 2 hours or 3 hours for a person to do, my programs will execute it in less than a minute on maybe 100 stocks. So I would keep myself out in a normal answer for you, but about 20 to 30 of them, and will be reasonably good enough to manage at the same time.
So if ETFs are the benchmark, so why don't we invest directly there itself?
It depends on what your expectations are. People have high expectations, right? And if you've not really studied the market, taken some historical data, reviewed it for multiple years, right? And not seen the value of that ETF and how much it can make, then you are missing out. Because you make a very good point. That is exactly what I was saying part of the presentation. I just took micro E-mini futures, which is like the S&P 500. That is the only instrument I traded for 1 full year whenever I had a chance to trade, right? On swing trading, not day trading, 1 full year based on market direction, only on that one single instrument, and it beat the market. Because I took opportunities on upward direction as well as downward direction. So to answer your question in a different way, people do not know what they want, what they expect, or what their expectations are for the year. That's why you're trying to look for all different opportunities and venues to make as best as you can, rather than quantifying what your results, what your expectations should be by the end of the year.
Thank you. And one last question is like, so as you said, in the stocks, we have the fundamentals like the P/E ratio or the returns and all those things. So what fundamentals drive the cryptocurrency? Because I don't see any logic or understanding of why someday it goes up, someday it goes down. So
Right.
is there any fundamentals at all there?
There is no fundamentals that go with the cryptocurrencies. All that we will have to go there is price action, technical analysis in that, because every single commodity out there in the stock market controls something, right? There's a goal to it, there's a company to it, there is a currency to it. But on the crypto side of it, right, there is nothing, there's no underlying commodity that backs up the cryptos. So if you have to do that, I can pull up uh, a chart quickly to give you an idea. I would use the same analogy that we're doing for the currencies there. If one of you can pull up the chart for me, please. See, if I do that and pull up the Bitcoin, USD, and see, here are some of them that I have. Right, we have XRP, BTC, Dodge, and all those little popular ones, right? The Ether and XLM and things like that. So you will have to do a lot of price action based strategies here and see which ones are actually performing, which ones are actually taking a turn on me, which ones are going positive. There are some websites that'll give you what kind of market cap is in there, what kind of volume is going in there. So I do a lot of volume analysis also to see which ones are all upcoming. I don't want to get into a Bitcoin or an Ether at this point of time, which is pretty saturated and the returns are not as much, but try to find those that volume is increasing, the market cap is going up, the returns are going up, right? Why don't we find something and put it into a comparison chart, track it here, and trade it based off of that? There is nothing fundamental that I would recommend to go off of. There's nothing out there.
Thank you. One last question is like, so how do I know that whether the market is long or short or neutral? Because like every day when I open up, few of my stocks have gone up, so some of them have gone down. So every day looks neutral to me. So
right, which is where I should do another session to walk you through my program. But no, what I mean is, it is difficult. It is difficult to do the analysis. So I kind of take the large caps, mid caps, small caps, put a lot of volume based analysis, also kind of measure the volatility in the market. So there's a lot of variables, factors that I put in to build this engine, and it runs on a daily basis and every night on how the market is done for that day. And I kind of spread it across, optimize it in a way that compared to the past historical performance, where does it really stand? Is it long? Is it short? Is it neutral? And that is where I publish it to the group, so it stands as a guide when people make decisions on their trading on a day-to-day basis.
thank you very much.
Perfect. So thank you so much, Vijay and Karthik, for the questions, and thank you for the very helpful answers, Mr. Hercules Babu. And I think we have a lot of questions from the audience as well. And because of the crunch of time, we are only going to have like limited questions for you. And then if they would like to, post a lot of questions, I think we would have your contact details listed at the end of this session. So the first question is investing in small caps more profitable than large caps?
It is seasonal, I would say, because you need to watch for it. When you say small cap, you need to track the Russell 2000, see how they're doing. At some point, Russell 2000 does extremely well. Sometimes NASDAQ takes over, large caps take over. So you need to do that kind of a comparison to see, is it going to be, if you want to do it at an ETF level, right, then I would say put SPY in there, put IWM in there as Russell 2000, put NASDAQ in there, QQQ, and see which one's performing. And those are the times you need to watch for to see, do I have to be in small caps or mid caps, large caps. Based on individual company, it varies. But to answer your question at a high level, put those three comparisons on ETFs. You'll get an idea which one's performing well at that given point of time.
Perfect. Thank you. So the next question is, what is the appropriate amount of time to be spent while researching the stocks? And there is also an additional question. How do we find good companies, as there are thousands of publicly listed companies?
All right. So let's go to the first one. How much time do you spend on this one, right? How much money do you want to make in the market, right? It's like going for a job and saying, which career do I pick? Which just means that how much education hours do you want to spend to learn that field, right? If you want to do something very basic in the stock market, right, like Vijay was saying, why don't we just stick to an S&P 500 ETF, right? Instead of going through all these thousands of companies. Yes. And I've already proved based on last year performance, one instrument can beat the market if you do it right. So if your expectations is to beat the market and still stay in that zone, you don't have too much to spend. If you can spend maybe 5 minutes, look up for what my market direction is, because I'm already helping out with all the analysis, and execute. 5 minutes is more than enough. But if you want to get one level deep, probably spend like 15 minutes to half hour, no more than that. But going back to the other question, you have thousands of companies. You don't have to enter into thousands of companies unless you have programs like me, and I run those analysis through the programs and identify the volatility, entry points, all of those things, and come back with a short list. I could do that. I could publish that. But as a layman, if you're only reviewing some of them, keep a short list, or keep only sectors in there, right? Set your expectations low and start moving up. After you get to a certain point, you will automatically know where you should spend most time on, which companies are you most comfortable with, which sectors you're comfortable with, and then go along. You cannot get to that end point without going through the journey.
Perfect. Okay, awesome. So yeah, that was very helpful and a wonderful answer. Thank you so much. And I think we would take like another one or two questions. So what would be the market direction in March and rest of this year?
All right. So the market direction is not a prediction tool. A market direction is more for swing trading. That means I'm not going to trade based off of market direction for June through December timeframe. This is to say, what am I going to be trading today? What direction am I going to be tomorrow, right? But I'm not going to be in there to say 3 months from now or a year from now what market direction is going to be. Those are different prediction analysis tools, different from what market direction is. I'm in the market for a week, 3 days, a few weeks, depending on how long the market direction stays, long or short. As it changes direction, I switch to. So what we're looking for the whole year is more like forecasting tools, prediction tools, and it is more of a long-term strategy on a buy and hold situation, and market direction is not aligned with that strategy.
Got it. I think this would be a last question. So this question is like, there are multiple different platforms available for trading. So I'm a beginner, and where do I start from? Like, which platform is the best to use?
See, if you're a beginner, I would say first find the right brokerage that comes with the tools. So you don't have to go for tools outside your brokerage. TD Ameritrade is a good one. They have Thinkorswim platform. They have multiple online tools there too. So that would be a good starting point. But if you want to look for tools outside of the regular tools provided by the brokerage, TradingView, one of the things that I was using to do the presentation, is TradingView is very good. It's got a free thing. The one I was showing is ad free. It's a premium one, but you can try a free one, and then the tools are amazing. The charting is amazing. The education purposes, there are several other areas that you can get into, but automation wise, if really somebody wants to get into that side of it, there are so many other tools on automation. TD Ameritrade with Thinkorswim provides good kind of automation API interfaces and stuff. Interactive Brokers also does that. There's several of them, and I also use tools like NinjaTrader and stuff, which is a trading a platform analysis that will connect through the data service providers as well as the brokerages. So it's kind of an all-in-one kind of a platform.
Great. Awesome. So thank you so much for that, Hercules. Thanks a lot. And, I think it's almost we are at the top of the hour, and, all good things have to come to an end. So, I think earlier I just read this quote by Benjamin Franklin. It says, an investment in knowledge pays the best interest. But after today's session, I believe that a knowledge in investment will pay the best interest as well. It's like the other way around. And thank you so much to Mr. Hercules Babu, and to our president, Mr. Sethu. To our vice president, Mr. Radha Rangarajan, Vijay Kumar, and Karthikeyan and Muru for the entire, for the session, and to our wonderful audience as well, who have been listening to it, and they have got a lot of questions on it. So thank you so much, everyone who have joined the session today. And a special thanks again to you, Mr. Hercules Babu. This has been a wonderful session where we have got a lot of knowledge on investment and the strategies. And I believe that we're going to, get hold of you and learn a lot from you. We have got a lot of questions. Each one of us have got a lot of questions. So please, I think we would have your email ID and your contact number in the chat or in the YouTube link. So I think we will all get in touch with you soon. So thank you so much.
Absolutely. And if anybody's interested to join the WhatsApp group, I can pass on that market direction. It's a free service anyways. So every day you can get that feed whether the market direction is long, short, neutral, to help out with your trading decisions there.
Sure. Absolutely. Thank you very much.
Thanks, guys. Thanks for the opportunity to take care.
Absolutely. Thank you, sir. It's our pleasure. Thank you very much, everyone, for joining the session. Thank you. Thank you, Mr. Hercules. Thank you so much. ஸோ இன்னைக்கு வந்து செம்மையா இருந்தது ஒரு செஷன். ரொம்பவே அழகா, அதாவது வந்து இவ்வளோதான் எனக்கு வந்து நான் ஆரம்பிக்கும் போது நினைச்சேன் சரி இன்வெஸ்ட்மெண்ட் அப்படின்னா. பட் இன்னைக்கு வந்து இன்வெஸ்ட்மெண்ட் அப்படிங்கிறது ஒரு பெரிய ஒரு கடல் அப்படிங்கறத நான் கத்துக்கிட்டேன். ஸோ நீங்களும் வந்து கண்டிப்பா இதுல இருந்து நிறைய கத்துருப்பீங்கன்னு நினைக்கிறேன். நம்மளுக்கு வந்து நிறைய கொஸ்டின்ஸ் இருக்கும். சில பேர் பிகினர்ஸா இருப்போம், சில பேர் வந்து நிறைய ஏற்கனவே தெரிஞ்சிருப்பாங்க. ஸோ நம்ம எல்லாருமே ஒரு லெவல் ஆஃப் நாலேஜ்ல இருப்போம். ஸோ இந்த மாதிரி ஒரு ஃபினான்ஷியல் லிட்ரஸி கோர்ஸ் நம்மளுக்காக கொடுத்த டாக்குக்கு ரொம்ப நன்றி. அண்ட் இதை ஆர்கனைஸ் பண்ண எல்லாருக்குமே வந்து பெரிய நன்றி என் வாழ்த்துக்கள். தேங்க்ஸ் அ லாட். ஸோ மீண்டும் அடுத்த ஒரு செஷன் வந்து நம்மளுக்கு வரப்போறது என்ன அப்படின்னு பாத்தீங்கன்னா, நம்மளுடைய மார்ச் 19 அன்னைக்கு நம்மளுடைய விமென்ஸ் டே ப்ரோக்ராம் வந்துட்டே இருக்கு. ஸோ நம்மளோட விமென்ஸ் டே ப்ரோக்ராம், அதுக்கப்புறமா நம்மளோட தமிழ் நியூ இயர் ப்ரோக்ராம். ஸோ ரெண்டுத்துலயுமே நீங்க எல்லாருமே வந்து பார்ட்டிசிபேட் பண்ணணும் அப்படிங்கிறது எங்களுடைய ஆசை. அண்ட் நாங்க வந்து கண்டிப்பா இதுக்கான ஃபார்ம்ஸ் வந்து இந்த செஷன் முடிஞ்சதுக்கு அப்புறமா உங்க எல்லாரையும் வந்து சேரும். ஸோ தேங்க்யூ very much for joining the session today. Have a wonderful day. Thank you.